all appreciate the ESCOs for the privilege, please, to share with our people. So let me welcome us once again. I want to believe that last week, time really worth it. Today is another day, and I want to believe that it's going to worth it as well. So let me quickly share my screen so that we can get started right away. While I'm doing that, can somebody just give us an overview of what we did last week so that we can keep ourselves up to date? Let me use that word. If someone wants to do that for us. So he's doing that for us. It is very important we do an overview so that we can.
Okay, I will try to say something. I may not be able to say it the way you gave it to us last time. I'm trying to check through my notes. But I know the first thing is that you talked about the overview of money. At least you tried to let us know how money started. And then after that, you go into the Forex trade proper. And then you give us some fundamentals that we need to know about Forex and some basic tasks terms that we need to know about Forex. Let me stop there.
Okay, so where exactly do we stop so that?
We stop at this area when we are talking about, I'm trying to remember that side, PV something PV something. I'm trying to pick my notes. So that's the reason. We talked about all this, where you talked about base, the asking price and things like that, that area.
Okay. So let me assume that we'll follow up on the, because one thing is this. The reason why they didn't teach us Forex in school is because you do it by choice. So, and when you are doing it by choice, you have to follow it through. And like I said last week, if you are going to follow it through as well, you must dedicate time to it. Forex is not even a kind of horse that you, they usually say that you can force the horse to the riverside or to the bank of the river, if you allow me to use that word. But you can't force the horse to drink the water. The Forex type of horse is not the type that you even force to the bank of the water. The horse himself must be willing to go to the bank of the water and settle there to drink water. So that's why I want to believe that what we are doing, we're going to take full advantage of it. Like I said last week, if you are going to have access to this kind of training, I know how much I spent on this. I spent nothing less than $1,000 to have this training. So you can just do your search and let's confirm what I'm talking about. It's not what I think I need to be able so that I can share my screen.
Okay, let me enable you. Sorry, I thought.
Send the right back.
Me?
So,
You should be able to share your screen now.
now, okay. So, so I want to believe that as many of us that are present here, we want to follow through, and that's why you are here. So let's see how.
Please, coordinator, mute everybody, please.
Okay.
So let's see how you proceed in your journey of Forex trading. So today,
my honorable, okay, let me unmute you.
I've done that now.
Okay.
Okay, I've done that now. Okay. So today we are going to quickly go into charts and how to place order. I think we stopped last week on what leveraging it's all about, shorting it's all about. We moved to brokers, if I'm right, how to choose a broker. Okay, let me start from choosing a broker so that we can, those that didn't come last week can actually
follow.
Yes, they can get a bit. If I think the video was shared.
Yes.
I'm not sure.
I shared the video, but there are some people like your people, they've not seen the video.
Maybe I can share it with them today as well when we are done with today's training.
Okay, sir. Okay, sir.
Yeah, so that they too can follow. That training is very, very crucial, very important. It's very simple. I don't even think but today I'm going to speak the language of the industry so that so that you can step up your what's it called? Okay, I think we've done the spread.
Yeah, we've done the spread, yeah.
Pips, lots,
yeah.
the calculation of
yes,
the calculation of pips and pips value. So the other
we stopped here. We stopped here.
Okay. So let me start from here. In fact, this part, understanding this part will help. We save us, or will help us to manage our accounts properly. Please don't mind me today. Let me just speak very soft so that last week I was on fire. So I have to, you need it. But today I'm a bit relaxed. I'm trying to watch myself so that I won't run myself out. Permit me to just follow my language. Okay, so let's go ahead. This part is very, very important. This is one topic that makes a lot of people run out of Forex. Not because they are not willing, but because this part can make you lose your money. This part. And the moment you blow your account, that's the language they use. The moment you blow your account, it doesn't feel good when you lose money. It doesn't feel good at all. The feeling is not okay, except if you are dogged. But there is a way you can position yourself. There is a question somebody asked last week, that is Forex risky? And I said everything in life is risky. Now, Forex is risky. There's no doubt about that. Are you going to lose money? I said yes. Are you going to win money, or are you going to gain or take profit? I also said yes. But what keeps you in this business is your ability to win more than your losses. And the only way you can do that is to manage the way you use leverage. I said something last week. I said that in Forex, because movement of this movement of currency are in bits. So if you are to go by what you have in your pocket, maybe for you to make $1, you'll be making $1 in a month, because it moves in bits. It moves by pip, and those pip is like, when you say $1, pip is like 4 decimal place of $1 behind. It's not even within the range of cents. So, and that's the reason why you need leverage, so that whatever you have in your account, you can actually the broker can help you to blow it, so that you can operate within, so that when you make gain, the gain makes sense, and when you lose too, it also makes sense. So leverage generally has two-edged sword. As leverage can help you to make more money, it can also help you to quickly lose your money. Not just even lose your money, it can help you to blow your account. So that's the way it is. But understanding what leverage is, what is the meaning of lots, and how they all work together, that's what will give you an understanding of what this means. Like I said yesterday, ratio 1-to-1 in leverage means that when you bring 200, or let's say your account is $1,000, you put 1,000 in your account. That is what is required of you. You require 100% of your money to trade. So if you have your account in $1,000, you have it in 1,000. Nothing hard to it. Nothing, uh, 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 taken out of it. So that's the way it is. 1,000. That is what you take to the market, and your margin at that point is still 100%. What it means is that the all money you're using in that, to trade at that particular moment is your money. I'll come back to lot. We have discussed lot. I said one lot is what? We have what is called a full lot. That's standard lot. That's $1,000.
Okay.
Yes. But look at it this way. Remember, I also said that trading is done in pairs. And what I meant by that is, there must be a base currency and there must be a quote currency. Do we still remember that? And just answer me so that we can.
Yes, sir.
Yeah.
Beautiful. Thank you.
Yeah.
So if we understand that there is always a base currency and there is it's a quote currency. So for example, when we have USD against Naira, USD is the base currency, Naira is the quote currency. So when you are using a standard lot, in this case, in this scenario I'm talking about now, it's going to be 1,000 US dollar. If you are using euro against Naira, it's going to be 100,000 euro. If you are using Canadian dollar, Canadian dollar against Japanese yen, it's going to be 100,000 Canadian dollars. If it is Japanese yen against New Zealand dollar, it's going to be 100,000 Japanese. That's the way it works. So the standard law takes the currency, it takes the denomination of the base currency. That's what I'm saying. So it's very simple, no story about that. So the other part is, if you are using two, if the leverage the broker is giving to you is 2-to-1, what it means is that when your account is 1,000, the broker brings 1,000 to add. So by any time you are trading at the level of 2,000. That's what it means. But your lot now determines how much you are using out of that. That's your, what's it called? Your margin determine how much of that fund you are using at a particular time. I think we did a few of the calculation last week. But until you start trading. This will not make much sense to you until you start trading. So that's why I want us to, quickly go into trading before we round up today. Now, a broker can give you as high as 1,000 leverage. Honestly speaking, when you are using 400, let me give you an example. Let's say you are using 400 to 1. The minimum they usually give is 50 to 1. That's the minimum. Hardly, if you come, I think it's of late that some brokers are now using 10 to, in fact, brokers use leverage to lure you into their platform. So you see some giving you as high as 8,000. And let me tell you the implication of 8,000. If you have $1,000 in your account and brokers give you up to 8,000 leverage on your account, the calculation is this. Anytime you are trading 1 million. That's $1 million. If it is dollar denominated, you are trading 1 million. That's what it means. So that's if you have 1,000 in your account and you are using the leverage of 1,000. Now, quickly here, you don't need 1,000 leverage. As a beginner, you don't need 1,000 leverage. Very, very important. I will say it again. Now, let me even advise expressly here. My advice is that anytime you are trading, the only leverage you need at this point is 50. That's what you need. 50. That is 50 to 1. That is what you need to start with. And this will enable you, it will keep you intact in the market so that you won't blow your fund or blow your account in a while. So that's the way it works. So you only need 50 to 1. And what it means is that if I have $1,000 in my account, with my leverage, I will be trading at 50,000. Don't worry about the lot size in front. Don't worry about that one for now. We'll talk about the lot when we get to trading in itself. Don't just worry about that lot. This lot explains directly what this leverage translates to, but in the trading sense of it. So let me now come back and explain that. Okay, for example, look at it. I'm using 50 to 1. If I'm using 50 to 1, look at it. Like I said, if I have 1,000, let's say I have $1,000 in my account. I'm using 1,000 as an example. And I'm using 50. That is 50,000. What's the 2% of 50,000? I'm taking you through another route now. Can somebody just do that calculation fast for us? That's the I know we have professors here.
Oh. What's the question?
I said the question is, I have 1,000 in my account.
Okay.
And I'm using a leverage of 50 to 1.
Okay.
So what will be and if I'm using a margin of 2%, what will be my trading volume?
Look like 1,000. If I get
Let's
it,
do it again.
8,000.
We won't leave. No, it's wrong. We won't leave it until we get it, because this is the fundamental. If you didn't get this part right, I can bet it with you.
25.
You can blow your account in one day. You said?
25.
The question again,
No.
please.
Let me repeat the question again so that we can get it clearly. So listen carefully now. I have
Okay, sir.
$1,000 in my account. That is my money. The money
Okay.
I transfer to my brokers for execution. $1,000. That's what I have in my account. And I'm using a leverage of 50 to 1.
Okay.
So
Okay.
what we, if I am using a margin of 2%,
Okay.
what is my trading volume?
$2,000.
How do you arrive at that?
Because we have 1,000, you have $1,000. So we assume that your broker also add additional 1,000 for you. Because you say in your slide here, you say 50 to 1. The leverage, you say 50 to 1, and then 2% margin. Give us $2,000. So that you bring $1,000, your investor also bring $1,000, making $2,000.
No, it's not investor.
Your
My
trader,
broker.
your broker.
You are the trader.
Yeah. Okay, your broker. Sorry.
You are the
My
trader.
broker.
So,
yeah.
Yeah. Okay, so let's try and solve it. Then I will ask another question. Though the answer is wrong. Sorry. Let me use my. Okay, so let's try and use pencil to. So let's say, for example, I have. Oh, sorry. I said I have 1,000, Abby.
Yes, $1,000. Yeah.
So let's say I have $1,000. I have $1,000 in my account. 1,000 in my account, and my broker gave me leverage of 50 to 1.
To 1. Yeah.
So what it means is that I'm operating at 50K.
1,000, yes.
Then if I have 2%, that is multiplied by 0.2.
That would be
25.
25.
It's 1,000.
It's not 1,000. It is
25.
10,000.
Is it?
Are you sure?
It's 1,000.
Okay, let's do it again. Let's see. So that's 50,000 multiplied by 0.2. 50,000 multiplied by 0.2.
It's 1,000.
1,000.
It's 1,000.
It's 1,000.
What kind of calculator are you using now?
Please, how do you arrive at 0.2?
That's 2 over
0.2. That is my margin.
That should be
That is my margin.
0.02.
That's 10,000 now.
Thank you. Sorry. Sorry. There, I've seen it now. Sorry. I'm calculating 20%. This is 20%.
Okay, it's 20.
This is-
Okay, it
Yeah,
says
it should be
So it's 10,000.
0.02.
So let's clear it.
Are you talking about 0.2 or 0.02?
It's supposed to be
2%?
0.02.
0.02.
Yeah.
Because
That
2%.
is 1,000.
it's 1,000.
1,000.
So that's
10,000.
1,000. Yes. Who said 1,000 before?
Isaiah. Alade.
Unfortunately, do you have Ethereum wallet?
I don't. I just calculated the way you have actually explained. I'm new in this business.
I said, do you have Ethereum wallet?
No, I don't.
I could have give you $10 immediately.
I can help him to open.
Don't help him.
Wow.
Don't help him. Doesn't have it. So maybe what you are going to do next, the next question I'm going to ask, be prepared.
Okay.
You might be lucky to win something.
Okay, that's good.
Okay, so let's go ahead. That's $1,000. Now, you know that you have 1,000 in your account. Am I right?
Yeah.
And you are operating at the leverage of 50 to 1.
Yeah.
And you are using 25%. You are using 2% margin. So it gives you one.
When you say you won't get this thing, or have you confirmed if she brought them?
Yeah, the answer is correct. It's 1,000.
I know it is. I'm trying to make something out of it. Now, let's say, for example, when you set your risk, and you set your risk to 1, these are the realities you are going to get in the market. When you set it to 1, what it means is that when you set it to 1.0, I will show you when we get to when we open the live chart in itself. When you set it to 1.0, it means that you are risking $1,000. That's what it means. You are risking the whole of your money.
That's what I'm saying.
No. I'm talking of something different. I've moved away from here.
Okay.
This one is your volume. This is the volume at which you are trading. But let's now say that in your risk management chart, you now use 1.0. What it means is that you are using the whole of your volume to trade at a time. So whatever happens to this trade affects $1,000. That's what it means. Now, whether it's in your favor or it's against, the market is against you, that's why I said leverage is a two-edged sword. As it can pay you up, so also it can blow your account down. If you don't understand this aspect. Are we okay with that?
Yep.
So very, very important.
Yes,
now, I'm going to ask another question now. So I want you to pick your biro.
Okay.
And let us solve it together now. So let's say, for example, in your account, you have $200.
$200. Okay.
You have $200 and you are still operating, because I don't want you to blow your account. Blowing your account means I don't want you to lose your money. You are still operating at 50 to 1. So you have $200. You are still operating at 50 to 1. 50 to 1 leverage. So let's assume that. Okay, so let's first of all calculate what is your volume based on what we have here. So it's going to tell us the volume.
Four. My volume will be 4.
It's 4.
Let's
The
do
answer
it
is
again. It's not 4.
Are we still running 2% also?
We have not even gotten to the level of 2%. Just let me know what is your potential trading volume.
Okay. 50
at
to
200.
10,000.
Mhm. 50K.
My trading volume is 10,000.
Don't worry, I know you have Ethereum wallet, so I know you have Ethereum wallet. Ethereum is not coming your way this morning. Okay, so
Please, sir.
so our volume is 10K. Yeah.
How?
It's simple now. 50 multiplied by 200.
Okay. But we didn't do that with the first calculation.
We did,
We
bros.
did. We did. That's why we got 50,000.
We did.
The 50,
Governor, let your mind be here.
And it's very simple.
Okay.
the 50
Listen.
represents the 10,000, while the 1 represents the 200.
That's Professor Isaiah. Okay.
No, Emmanuel.
Okay, our special
I must go with my dollar, don't worry.
Okay, so we did now. It's 10,000. Is right. So okay, now let's now assume that. So what it means is that 200. That's what you have. That's at 200. At $200. That's what you have. Now, by the time you start trading, and you start trading at let's say your margin, you set it at 2.5%.
Okay. 2.5%.
You know, I have to complicate it so that I will be sure that you it's the concept that is most important, not even the figure. If you understand the concept, you won't make error. You won't make any error.
That's 250. 250.
Okay. So if you are operating at 2.5,
It will come 250.
so what it means is that
Hello?
you are risking.
Hello?
Are you sure it's 250?
Yeah, it's 250.
Yes, it's 250.
So what it means is that you are risking $250. Now look at it. How much
it's
do
more
you
than
have?
what you have, 200.
Yeah, so your risk is higher than your portfolio. That's what it means. So what happened is that
that's trouble.
No. So what it means is that the moment you overuse your margin, then here you are going to be minus $50 deficit. So, but you know what? Your broker will not allow you to use the $50 excess because it's not your money. Did you understand?
Yeah.
They won't allow you to use the 50 on top. They will be calculating against you. The moment it reach your 200, they will close the trade for you automatically because you can't lose their money. You can only use your own money. But you borrowing their own, using amount that is over your margin is like walking. It's like you are like a masquerade that is rushing to the express road.
Yeah.
You know what is going to happen?
Kasala. Google, be careful.
No, I have to go in that dimension so that somebody will. So you are like a masquerade running to the express road. They will allow you to set it. They will allow you to. So what it means is, in the actual fact, if you are not using 2.5, you are using more than 2.5. So this is the concept that lay foundation for you. The moment you understand this, you are ready to fly and you can manage your risk. So this is part of the trading psychology I was talking about last week. Another thing is this: it is better for you to save what you have in your hand. You understand? Rather than running after what is not sure, what is under probability. One thing I have discovered over time is that market trend is always your friend when you understand where the trend is going. So it's always your friend at any point in time. But there are times when a friend can turn against a friend. And
Forex is always like that. It will always want to turn against. And the reason is simple. When somebody is losing, at the time when you are gaining, somebody is actually losing. That's the way it works. So the money is not coming from the thing here. As you are gaining your profit, somebody is losing elsewhere. As somebody is gaining somewhere, probably you are losing. So this is how the game works. You have to make sure that your losses are less. You understand? What it means is that always, and if you are going to do this, you won't be operating at every margin. Even if you are operating, there is a way you can set your you can preset your loss to $20. Can somebody tell me what will be our margin if we are to preset our loss to $20? Just by looking at what we have with my calculation or with our calculation here, at what margin will you be operating so that you'll be sure that even if I'm losing, it's only $20 I'm losing?
0.5.
Thank you, sir. Are you sure it's 0.5?
Yes.
No.
20%.
Okay.
2.0.
No, it's not 0.5. Eh?
2.0.
No.
$20. If you are using $20, that would be around.
If you want to preset that my loss will only be $20, at what margin will you be operating?
I think 0.02.
So that will be 0.2%.
0.2 or 0.02?
0.2%.
Okay.
You know, if we are to use,
But 0.1% is $100. So
no, it depends on what you have in your account now.
okay.
I'm talking of setting your risk now. I mean, your risk now. Risk is not even coming up here. This is the volume you're operating. If you set your lot to this, you'll be operating at 550. I mean 250. Then if you now set your risk at 0.2%, you are going to what you have just said is that I can only allow my account to go negative by $20. So it won't go less than $20. So even if you are losing at all, you still have 180 left. You are still in the business. That's what I'm saying. Okay, so I want to move away from here now. If you didn't get this part, sorry, maybe you have to repeat this class. Unfortunately, there's no makeup class. So this one, you need to get it. Eh? This is what will give you the confidence because you already know what you are losing. Eh? You know what you are losing, so you don't have problem with that. So when you are going to trade, you go into trade with all confidence and you won't be afraid. So this is very important. Okay, so let's do the last question before we leave this place. And our last question is that now God has blessed me and I have my account with 5K and I'm still using my same leverage 50-1. What's my volume?
Say it again, please.
I have my trading account balance is 5,000.
Okay, 5,000.
And I'm still using
50-1. Okay.
What is my volume?
250,000.
Volume is 250.
250K.
Thank you, sirs. 250.
Okay.
This is not mathematics, so
I know.
this is moneymatics. This one is moneymatics. You know, some people don't like mathematics. The moment it's natural for them, the moment you start 1 + 2 3, their system just shut down automatically. So, but when you say, it's just like when you say 5 + 5, they will be thinking, oh, 5 + 5, it is 10. But just tell them 5 naira plus 5 naira. Instantaneously, they will give you the answer. And the reason people understand money language than what? Than mathematics. So this one is moneymatics. So let us get that one clear. Okay, so let's now assume that we are using 3%. At every point in time as a beginner, never use more than 3% in your lot. Never use more than 3% in your lot. With your lot calculation, if you are using 3%, I'm moving a bit further now. So what will be our lot? What is our lot? What will be the volume of the lot we are operating? 3%.
At 3%.
Okay. 5. 7,500.
Thank you so much. 7.5K, which means we are operating at 7.5. So what it means is this.
7.5 or 750?
The owner, 7.5. That is 7,500. $7,500.
7.5.
Yes, 7.5K.
So what it means is that you brought $5,000 into your own account. The leverage is just like a loan given by a broker to you. So the leverage given to the broker now say, because you have brought 5,000 into your account and you agree to operate at 50-to-1 ratio, I'm giving you 250K. So you have $250,000 to operate in the market. You have the whole volume. But because you understand that 5K is your own money, you are now using 3% of that volume. So what it means is that 7,500K is what you are using for this trade now. Did you get that?
Yeah.
Yes.
Beautiful. So you can now say, okay, out of this 7,000, this is what you are going to use anyway, no problem. But you cannot lose 7,500. Sure, you know that?
Yes.
I believe you know that.
Yes.
Because when you look at this is more than your own money. Am I right?
Yes.
Yeah.
It's more than your own money, so you can't lose 7,500. But you can lose your 5K because it's your money. Whatever is left out of it is not your money. What is your own money stops at 5,000, and that is the highest you can lose. You cannot lose the leverage given to you. That one is clear, and get it straight. Okay, so you can now say, you cannot preset out of this 5,000 how much you are willing to let go in case the trade go against you, or the trend go against you. So you can now say, okay, I can only do 0.2. Let's say it is 0.2 in percent. In percent is going to be 0.002. Am I right? Am I right?
Sir.
Beautiful. So let's see. You are not going to, okay, let's just calculate and see. You are not calculating this 0.2 on your 5K. You are calculating it on the volume that you are trading with. Multiply by 0.002. What do you have there?
150.
What do you have there, please?
10.
1.5.
It's
1.5.
10.
This is not 1.5. Oh, this is
Sorry,
$15.
1K.
This is $15.
It's $10.
Is zero. That is 0.2% of your traded volume, 7,500.
500.
$15. $15.
Thank you. Now you understand. Because this is your balance. This is your account balance.
It's 50, not 75.
Don't get it wrong. Just hold on. This is your balance in the account.
Yes.
This is the leverage given to you by the broker. Don't confuse also. By the broker.
It's
Then
$15.
you now said, don't worry, and let us explain how we get $15 so that they will understand. So this is what the broker is giving you to trade with. Then you now say, out of what you are giving me, let me just use 3% lot. I'm using 3% lot, which is equal to 7,500.
Yes.
This is what you are exposing to the market for trading, 7,500.
Okay.
Now you can now preset your loss to 0.2%, which gives you $15. In other words, if the trend goes against you, you cannot lose more than what? You cannot lose more than $15. So you have preset your loss even before you move into trading. That's what it means. And this is the best way to enter trade, because you can't lose more than this. But you know, the beauty of it is that if the trade should go up by the same percentage, it is way, way, way more than what you have in your account. So that's the way the trade works. At this junction, if you didn't understand at this junction, I think you need to join some of our colleagues in Malaysia so that they will enroll you for PhD, and you can get it better. I think I've done a good job here.
Yes, sir.
Yeah. We did follow.
You are free to say yes, except if you are jealous. Okay, so let us move to the next thing. Now, I want to talk about short selling. But before I talk about short selling, I think it's more appropriate for me to talk about, let me explain candlesticks. So understanding candlestick will come back to short selling, and we'll come and explain what short selling is. So let's talk about brokers. How to choose the right broker? So I will be very, 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 very sharp here. Broker is the person that executes order on your behalf. They give you access to the network of they call it liquidity providers. Those liquidity providers can be banks, they can be central banks, they can be huge hedge fund providers. All these big guys that play within the. If you check last week's lecture, I made mention of a few of them. I mean, I explained that part of liquidity provider. So the liquidity provider provides liquid for the market, and they can be anywhere around the world. Then you at the other side, because you are the least of all of them, you have small money, you are at the individual level. So you plug into the network to have access to that liquidity and trade. So if you win, fine. If you lose, fine. That's the way it works. So broker is just somebody that executes or facilitates the execution of your order on the network. Why order in itself is just an instruction, just like the way you give instruction to your bank to either transfer money to someone or receive money on your behalf, or to pay money, make remittance on your behalf. It's just an instruction. So those brokers too, they provide a platform where they can receive your order, whether sell or buy order, and execute on your behalf. That's how to link it together. So how do you choose a broker, number one, you need to consider whether a broker is regulated or not. There are some brokers that they are regulated in UK, some of them in US, some of them in Australia there, and which other places? All over, Japan, China. They are regulated everywhere. There are some that deliberately made themselves unregulated, and the reason is that it's not because they are not good, just because they don't want to fall victim of legal implications. Now, let me tell you this. Because Forex is a very sensitive market, especially to the government and the financial sector, in most cases, most people fall victim of law. Like, for example, if I'm operating from Nigeria and I have a broker in Australia, the Australian government can sue. They can sue the broker because the broker. In fact, I have a broker in Australia. I have a broker in Australia, which is heavily regulated. I have a broker in South Africa, heavily regulated as well. And I have one that is not regulated by any of these countries. It is not regulated. And the reason is that if anything happens, nobody within those jurisdictions can do or can sue him because it's not regulated by them. So most brokers are moving gradually to that part. And the reason why they are doing that is because, let me give you an example now. My regulated brokers, I've been working to make sure that I opened a South African broker. That was last week. I have a new platform that is more friendly and very easy to, not really easy. The visualization makes sense for me. So that's why I need that South Africa broker. And I register with them. After registration, they didn't get back to me until 3 days to ask for my documentation. So after 3 days, I have sent to them now. It's going to almost like 5 days now. They are not done with my KYC. The same document I use for them, that's the same document I use for Australian broker. Those guys finish my they finish my KYC in less than 24 hours. In less than 24 hours, they are done and they are counting. I'm the one delaying them now because I just have to move money on that platform and start trading with them. So the same thing happens to the UK broker that I'm also using. The same thing. In fact, the UK brokers, they did it in less than 12 hours, their own KYC. So it is because of this complexity in KYC. That's why most of this unregulated, they just want to make sure that they use an instrument that makes it easy for them. Like my unregulated broker, immediately I opened that account and I submitted my documentation. They allow me to deposit into my account, and I just use my Bitcoin because I have that one handy. I don't even need to go through any bank. I have to. So I went through them. I just used my Bitcoin wallet and I transferred funds to them immediately, and I started trading. For the South African broker that I told you about, there was a payment I was supposed to make. And the only form of payment was, either you are using a card or you are using a PayPal. I have to go to bank and sit in bank for almost 4 hours, like a whole day, to make sure that my card can operate. Eventually, I have to order for a dollar-denominated card so that I can operate with them. You can see what I'm talking about, the complexity of, remittance and payment in our globally, connected financial world. So at times, it is good for you to deal with regulated because they can run. The unregulated can run and they decide whatever. But if you see that they are transparent in terms of their operation, transparency talks about their charges. That's what is called spread. If you remember last week, I talked about spread. The gap between the sell ask and buy. Ask and what's it called? That is the ask and bid.
And bid.
Yes, ask and bid. That's the difference between the ask and bid. That is sell and buy prices as at that time. So now, There are times when when your brokers, how do they make money? Some of them trade against you. In other words, they act like all these bureau de change. They buy from someone and sell to you. And when they are selling to you, they must have added their own price to it. So in that kind of brokers, they are trading against you. That's what it means. They don't have your interest at heart. There are brokers that the only way they make money is by your trade commission. And they have it spelled out there. And there is a way you will know what they are spread. They only trade by spread. That's all. They get commission from your own trade. There are some of them that had hidden charges to it. As you place your order, that's when you will see the actual money they are going to charge. So these are some of the things. If they are not transparent in terms of their operations, just look out. Somebody that is trading against you cannot have interest that is aligned to you. So what is the definition of alignment to your interest? The alignment to your interest is for them to help you and not to charge you heavily. And that talks about the next point, which is the low fee. They must be charging low fee. Because let me tell you, the implication is this: if your broker is charging you high fee, what it means is that anytime you place a trade, they are going to add that as margin into your trading. And what it means is that before you can break even on that trade, you must first of all make their own money and then make your own money. And when you are also losing, you have to lose their own money first before you start losing your own money. In other words, if you are losing one and they are charging two, you have lost two. If you are trading one and you have lost two, which means one is inside their own. And let's just say if you are gaining one and they are charging one, you must make two to break even. That's what it means. So you must watch their fee, the fee they charge. Very important. Another one is the leverage. Like I said, most of them nowadays, they want to give you as high as 1,000. But never ever judge your choice for a broker by the leverage they give to you. It's very dangerous. Very, very important. Do they have good platform? Good platform talks about that's the connection between the trading platform and the broker's platform. Is their platform very friendly to work with, and the rest of them? Then what is their support like? They must be ready to support you. Majority of them have 21/7 support. So 24/7 support. So these are some of the criteria you use to choose your broker. Forex brokers and their. So we have what is called A book. We have what is called the book A book, and we have the B book. The A book is the other book that has the major liquidity provider in them. In other words, this one is direct to the ECN. It's directly to the network of the liquidity provider. You are operating directly. The B brokers have their own order book. So these are the type of people that actually sell against you. These ones, they don't operate. They might be hedged and they might not be hedged. You won't even know because you are operating on their own in-house order book. So you won't know. And these are the type of people that I said they usually do it against you. So these are some of the examples of brokers. You can do a screenshot or you just pick the whatever and check it later. This is the South African one that I told you about. You look out for it. Very, very interesting. Very interesting in the sense that they are connected to a particular trading platform that makes your charting, your everything easy for you, so that you won't fall victim of anything. Okay, so let's talk about candlestick and candlestick pattern. This is we are now in trading. Go. So what is you need to understand candle patterns, because candle pattern tells you price action. And when you are trading in Forex, you are actually trading price actions. You are trading price action, you're also trading trends. So let's look at what candle is telling us. So look at what a chart looks like. This is what a chart looks like. Let me quickly switch my trade, what I'm sharing, so that we can Okay, let me see if I can share. Oh, sorry. That's hold on. Where is it? Where is it? Where is it? Okay, I have this. What can you see on my screen, please? Is it my presentation? Who is there?
The
What can you see on my
candlestick.
screen?
Presentation of the basic of candlestick.
Thank
Trading
you.
chart.
Yes, I want to be sure that's what you. So I'm sharing. I want to share another thing so that you can see what. So look at this is. Can you see this screen now?
Yes.
Yes.
This is what my. This is what a chart looks like, and I can give you the what's it called. This is a free platform, but you have limitation to what you enjoy on it if you are operating on just a free account. But it's a good place to start. As a matter of fact, this is, for me, if you ask me, this is the best in terms of friendliness, the best trading platform. This is the best. It is called Trading View, and the reason is that it gives you a lot of tools to use when it comes Trading View. So you can go to tradingview.com. tradingview.com. You can open your account there, just play around it. In the actual fact, we will be using either Meta MT, they call it MT4 or MT5, MetaTrader 4
Okay.
5.
Okay.
So you can also download either MetaTrader 4 or MT5. MT5 has more feature than MT4, but MT4 is what MT4, MetaTrader 4, MetaTrader 5. Now, what's the difference between the two of them? Now, this one, Trading View gives you a lot of tools. They have directory of tools, as in a lot of them. Because it's an open platform, open source platform, let me use that word. A lot of programmers that are also traders, they develop different tools to make it easy for you to understand your trade. I mean your trading activity. So it's one of the best. It's one of the best. You have a lot of information here. It doesn't make sense to you, but don't worry. It will make sense by the time we get started. As in, it will make a lot of sense. So, but the difference between this and MetaTrader 4 is that MetaTrader 4 you have a lot of tools that are developed like a robot. You cannot run a robot on MetaTrader 4. I mean, sorry, on Trading View. Sorry, you can't run a robot on it. You can only use this one to do charting, connect your broker to it, and trade directly here. Or you do use this one to run your trading. After using it to run your trading, then you use your what's it called? You use your MT trader to execute, because this one will enable you to understand better. Then you can now go to your MT4, MT5 platform to do what? To execute those ones. Then, like I said, you can't run robot here, but you can run robot on the other side. So whichever one makes sense for you. For me, I love the two, because there are times you have a very good understanding of what the market looks like. So you don't have a problem with that. You just go straight to the point, set it up here, and execute from here directly. But there are times when, even despite the fact that you understand, you want to be at a point where you are safe, and you want to use a robot, or you prefer the other side. So you set up your chart here, then you go to MTR. So let me show you what MT4 trader looks like, or MT5. we'll just use MT4. So let me share that one as well. So you can download MT4 or MT5. Okay, somebody wants to ask a question. Ruth. Can you ask your question before my MT opens? It's just for you alone, not no one else. Oh yeah, ask your question. Can you unmute yourself and ask the question? You are raising up your hand. Okay. If you are not there again. Okay, you are still there. Oh, yeah, ask.
My question is, I was talking about like the platforms. We are talking about good and exists Ethereum platform called Forsage. I wanted to buy Ethereum from, so I really don't understand how to access those platforms to know if it's going to last. Because I asked somebody about it and the person was saying it was not going to last. So it kind of made me. So that's my question.
So Forsage is outside of this context. Forsage is just a platform that enable you to acquire Ethereum without necessarily trading. It is by recruitment or by subscribing to the global pool. So it's outside of this. This one you are trading yourself. That one you just use your money to activate what? To activate money making. I'm making money from it. So it's not, maybe it's different from this. This one is purely trading. That one is a platform in say it doesn't have anything to do with what we are talking about. So if you want us to talk at the level of Forsage, let's get out of this class. Then we can talk about that. Did that answer your question? Did I?
And the other question, I already understood it, was when we're calculating your volume and other things, but I already got it.
Okay, beautiful. Thank you. So you can unmute now. Somebody asked question from the chat. You can unmute. I mean, you can mute yourself now. Yeah. You said what will be the best leverage for $100? $100 is a good start. $100 is really a good start. So you can still use the same calculation we did here. The leverage is, you can still use 50 to 1. See here, don't say, because like I have most of the brokers, they can give as high as 500. Most of them give as high as 1,000. So don't say because you have that volume at $100 and you are overusing your leverage. 1 to 50 is good for you. Simple and straightforward. And your risk level should not be more than 3%. And your lot size should not be also more than that same, maybe 2%. Very important. So at that point, you will know that even if you are losing, probably you are losing $3. That's what you are losing at any point in time. But there are situations where even when you are still presetting your loss, you can still give it. You can make it a bit higher, because okay, let me give you an example now. I'll give you an example. Let's get there. I will give example. But 50 leverage is good. That's one. Secondly, at every point in time per trade, use 3% per trade. That's for your lot. And for your risk management, always use between 0.2 and 0.3 at most. It's the most conservative way to trade. You are sure that your money is intact. Your losses will not be more than your gains, and that you will be in the market. The idea is when you come in, you just, if it is 7% per day you are making on your money, look at what that will become of you in 1 year or in 6 months. 7% on $1, that is $7 every day. $7 every day, $7 every day. That's what it means. $7 every day. If you are making $7 every day for the next 6 months, it's not good. You must have automatically double. In fact, making 7% every day is even on the high side. Yes, making 7%, it's even on the high side. So understand that principle. But let's assume that you are making 7%, which is possible anyway. I've used $300 to make $50 in a day. I've used that's $300 to make $50. But I did that because I was like a masquerade that is running to the express road. I quickly cautioned myself. So honestly, I quickly cautioned myself, and I stopped that kind of rat race. It's a rat race. The only way I can do that is probably if I show my balance to like 8,000, I have 2,000, I can now do that kind of, I can improve on my risk. If I'm still losing like $50 on 2,000 accounts, it's still okay, only that I won't lose it consistently. So it's still okay because 50 out of 2,000, I still have like 1,950. It's not bad, but it shouldn't be consistent. By the time you lose $50, before you know what is happening, you have blown up your account. So we can still maintain that same percentage, that same setting. So let me quickly share with you. Let me share with you this my account, and we'll see. We'll check what MetaTrader 4 looks like. So let's share for MetaTrader 4. I hope you can see this.
Yes, sir.
Yes, this is what
Yes, sir.
This is what MetaTrader 4 looks like. You see that it's almost similar to what we have there. I'm going to I started with this. This is just a demo account anyway, and I started with 10,000. That's 10,000 equity. I've been able to in 3 days raise 10,000 to 18. I've been made profits of $18 in that account. This is what the history looks like. Look at what it looks like. So that was a day I made a huge loss. Look at this. Can you see the loss here? This, let me show us. Let me use annotation so that this day was the day I was. So look at this. That was the loss I made, about $51 in one day. In fact, in a single trade. Okay, so let's now check other. So out of how many trades do you see? $10 gain, 1 point something, $7 gain. Somebody will say these margins are very, very small. Yes, they are small, but they add to the account. You can see $10. That was a particular spot. Okay, $9. Okay, look at this. This is $22 at a go. This is $11 at a go. This is $9 at a go. So by the time you calculate all of that minus the broker's charges, then I was left with 17 for something. So you can see that's what that was a part. Okay, look at it now. It ends up at $18. So that's just the way. That's the way it is. You can see out of how many trades, out of so many trades, I was able to. I lost only one, and that one was very huge. So from there you can see. Let's say, for example, I preset it to a particular to a lower. Eventually, I lost that trade. So if you are losing eventually, make sure you lose. And the idea is get into the market. The moment your setup is wrong, get out quickly and go and create a counter trade to recover that. You can imagine if that 51 that I lost is around $5 or $10, you know what my balance will look like. So that's the way the trading works. You keep learning. This is just a demo account. That's why. Okay, so I just want to show us what the charting looks like. Let's go back to our presentation slide so that we can explain this slide thing. So let's go back and explain those. Okay, so now that you've seen what charting looks like, all these candlesticks you see, they provide information that enable you, that makes you to understand what market looks like. Let me quickly say something here. In Forex, you are making money at both long. This is long. Let me use annotation so that I won't just be talking anyhow. When you are using both long or short, don't mind the what's it called? The length of my drawings. Let me try and edit it so that. Okay. So, like I said, when you are buying, that is long. You are placing a long trade. When you are selling, that's the short. You are shorting. Mind my writing here. I'm using what's it called? So that's the way it is. Long, short, long, short, long, short. Buy, sell, buy, sell, buy, sell. So that's the way it works. But whether you are buying, whether you are selling, you need to understand what the market is saying. And your candlesticks give you a clear overview of what price action looks like. Don't worry, I already said I'm going to be using some of their jargon so that you can get used to it. And so those price action, what it means. So let us look at the information provided by a candlestick. In trading, there are three basic types of charting. That's the chart, yes, that you can use. I will switch back. Let me switch back to the. Let me switch in between them. Now look at what I have here. I think you can see my the trading view that I'm talking about. Can we see it?
Yes.
Beautiful. So, like here now, you have a lot of them here. That's in a trading view. That's why I said that there are a lot of a lot of charts. There are a lot of it's a repository of different types of tools. So, but in MetaMask, you have three major. That's the line, the candlestick, and the bars. I will go back there and you see. But I just want to let me switch. I want to switch to. So this is the candlestick. So you see it better now. I have an active trade here. That's why you are seeing this one. So don't worry about these ones. I have an active trade. So let's make it bigger so that you can see it. So that's the way it is. Then the second one is the bar. This is how the bar looks like. This is how the bar. I will use two. We'll come back to this bar if time permits us. We'll come back to it. The other one is the last one, which is a line. They help you in different circumstances. I'm going to explain. I will explain their usefulness. Anytime you are trying to draw your trend line, you want to trade, and you want to set up the market for your trading. Line is the best. While when you are trading, you use the candlestick to take, to follow the market. Use the candlestick to follow the market. You can also use the bar as well to follow the market. Only that they help those two make. So that's. So let's switch back. We'll switch back to. Let's switch back to our slide. Oh. Okay. So let us look at the information provided. We have what is called green bar, green body bar. We have the red body bar. Now, when you have green, like my explanation last week, I said trading is like having a two team with in a row competition. So we have team A here. Sorry, let me remove this. I will use a different color for that. So let me use this. And we have, this is the trend line. Then we have team B. We have team B here. So we give them rope. I hope we understand rope game now. So giving them rope, and they start pulling. Boom, boom, boom. So A happens to be the what? The buyers, while B happens to be the sellers. So anytime the B's are close to the trend line and they pull, that is, they are they pull the A to the trend line. They are the one moving backward. At that point, okay, let me use, oh, sorry. This is what is, sorry. Sorry for that. The annotation is somehow. Okay, so this is their line. So each time these guys, B, pull these guys to this side, that's when you have the bar increase. Each time these guys push this one, I mean, if each time these guys push this one to this side, this is what you are going to have. Something like this. So the simple analogy is that when buyers are in control, that's when you see this the gray bar. When the sellers are in control, that's when you see the what? The red bar. That's what it means. Okay, let's move on. Okay, so let's check the information provided by candlestick. Now, on the green bar, I want to draw now so that you have a better understanding of what this looks like. So let's look at the information provided by this. The first thing is that, look at it here. This is the green bar that I told you about, the green board that they call it, that is buyers are in control. And it is long, they call it long candle. So you long. So what it means is that if we are using daily time frame, don't worry, by the time we get to chatting, I will talk about time frames there is what is called minute time frame, we have hourly time frame, we have daily, we have the weekly, we have monthly, we have yearly. What it means is that if it is daily, one candlestick like this represents a day. If it is hourly, let's say 1 hour, one candle like this represents 1 hour. If it is by minutes, it now depends. You can have 1 minute, 5 minutes, you have 15 minutes, you have 30 minutes, you have 45 minutes. So if it is 45 minutes candle, which means each candle will represent 45 minutes of the whole, trading day. That's what it means. So let's assume that this is a daily trade, a daily candle. What it means is that by 12:01? That's the opening for the day. So early in the morning, price open at this price, at this point. Then the sellers gain control and push it down. But the control wasn't really enough to put them beyond this. Then the buyers gain control back and start moving up, get to this level. The sellers also now gain a little momentum and push it back. So at the end of the day, the price closed at this price. So what it means is that for a green candle, that is a long candle, the price closes higher than it opens in the day. Though it might experience a lower price moving to the lower, but the buyers still gain, momentum, push it up, and they do what? And close at this point. Blue candle, either blue or green candle, they always open at a lower price, close at a higher price. That's what it means. This is what is called a candle shadow. This pushback, this is what is called pushback, and it is sharp. You can see that's why it looks like a wick of a candle. It is sharp. That's why it looks like a wick of a candle. So that's what is called a sharp rejection. This is also a sharp rejection at this point. So that's what you see. Each point here is called pullback, rejection. Closing price, opening price. This is the body of the candle, and it's green because it opens at a lower price, and at the end of the day, it closes at a higher price. When we move to the other side, which is the red candle opens in the morning at a higher price, rose to the highest But that at this point, the buyers gain control and they push it up. But the force wasn't really enough to sustain that momentum, and there was a push back by the sellers, and then the price closes at pushes back to this lowest within the day. Then the buyers also gain control, and the control was not enough to sustain the momentum upward, and closes at a what? At a lower price. So for sellers in control and a red candle, that is called short candle, it opens at a higher price, closes at what? At a lower price. That is what is telling us. Okay, so before, if you have question on these two, this is also very important for us to understand, so that don't let me assume we have, because if you don't understand this one, don't move forward. So if you have question, ask me. Ask me, please. Is anybody raising hands?
I think so.
Nobody? Okay, thank you. So which means I am good to move on.
Yes.
Beautiful. So let's move to the next slide. So I want to believe we have that understanding. I'm going to drop this chart in the room. Anybody can pick it up, and you can study this. These are different candlestick pattern. We have this two represent neutral. That's what it means. So look at what we call this one bullish candle. That's the one I said the other time. Opens at a lower price and closes at a higher price for the day. If it is daily candle we are using, that's daily time frame. We have the highest here. This is the shadow in between the close, and this is the shadow. Call it upper shadow, lower shadow. Lower shadow. Then the same thing here. This is bearish candle, which opens at a what? At a higher price and closes at a what? At a lower price, with lower shadow, upper shadow, the highest price, the lowest price. So let us look at this pattern. We have different patterns. This one is called doji, and we have the second, which is called spinning top. When you have a candle pattern like this in a chart at a particular trend, this one shows that the market is at indecision level, or they call it at accumulation level. This is more indecision than this one. This one is more like accumulation level. Accumulation level, which means both buyers and sellers are gaining momentum. They are gaining momentum. This one is a point of indecision. And the funniest thing about these two types of pattern is that it can either be uptrend or what? Or downtrend. It can either be uptrend or downtrend. It can either go up or come down, because at this point it is a neutral pattern. You can't determine who gains the power at this point. So that's what it is. So let us try and look at some of the other pattern. I will try as much as possible to explain them in the most simplified way, and probably maybe when we now switch to charts in itself, then I can we can look out for them within those charts and see how it works out. So we have the first one that is called the bullish candlestick patterns. Now look at this. This is called AMA. This is called AMA. You can see it looks like AMA. The other one is inverted AMA. These two, AMA. But one is full AMA. And this other one is is inverted AMA. So what makes them bullish? Let's quickly try and explain. And when when I call it, when you say bullish, it means that the price, you will be looking for opportunity to buy. That's what it means by bullish. Whenever it is bullish, you are looking for opportunity to buy because the direction is long. Whenever it is bearish, you are looking for opportunity to short, that is to sell. So let's go back. Let's go back to this. Let me try and zoom in. Let me try and zoom in. Sorry. I think you can see it better now, Abi.
Yes, sir.
Beautiful. So let's raise it up. Already I've explained the neutral ones, so we don't need to bother our head about it. It's just indecision, nothing more than that. The only thing is this one is what? This one is accumulating at this moment. So, and this one is totally indecision, and they call it doji. This is more dangerous than this one. This one, the two of them are gathering momentum. Whoever owns the power gains gains the market trend. So it can either go up or do or come down. This one, the same thing can happen to it. It can either go up or come down. When you have a situation like this, it is the time not to do not to trade at all. You just stay out of trading so that you confirm the direction of the market first before you place any trade. Let's move to the next one. So like I was saying, this is AMA. Now, how do you know this is an AMA? You are going to see this type of you will see this type of pattern on your chart. But before this AMA, the moment you see this pattern like this is a bearish candle. It shows that the market has been coming down. It has been coming down, and as it's coming down, it's getting weaker. When you look at it from here, there was a rejection here. There was a rejection here, and after that rejection, the power of the sell power get reduced, and they got rejected at this point. Now, at this point, they got sharply rejected. You can see as they move down, so also the buyers now gain power at this point. So the moment they gain power at this point, you see what they did here. They push it up. They push it up, and they now totally gain control of the power. Then that is a sign that the market trend is changing to uptrend. So you are looking for an opportunity for this sign. It's just a sign. Now, you don't enter markets blindly. It's a sign. The second thing you want to do is to see a confirmation. You can either wait for this or you wait for the two of them. So the moment you see these 2-3 patterns coming up at the same, so this is like a confirmation that you can come in and take your trade from here. Then it shows that the buyers are in control, and when you buy, then the trend moves in your favor. But like I said, there are times when some whales in the market, they play on people's intelligence. They know that the moment you see this hammer, that is what you are looking for, a confirmation, and they give you the confirmation. The moment they give you the confirmation and you place your buy here, they just change the game for you, and it comes against you. That's why I said in most cases, try as much as possible after confirmation, and just make sure that even when you are entering a trade, there is an opportunity for you, probably at the bottom here. Let me show you at the bottom where to. So like I said, this is the confirmation. This is where you can enter. This is the sign. This is the sign. This is the sign that trend is about changing. This is where the confirmation, that this is where it's confirmed that trend has actually changed. Then you can come in at the third candlestick here. The moment you come in at this candlestick and everything continues to go up, that doesn't mean it will go up straight. It might be coming, going, coming, going, coming, going, but the trend has changed. So if you want to place your stop loss so that you will not lose, you can just come and place your stop loss at this point where the trend change. That's the point of support. That's what they call it. So that's what makes it bullish. The same thing with this. It's called inverted hammer. At this point, they are the buyers are in control. They are still in control. They want to be in control. Look at what they push it. It moves up and they push it down, but they don't have the force to push it completely before the end of that day. Remember, I say if you are trading whether in the daily time frame or hourly time frame. So this tick now in the daily time frame represents 1 day. So in the morning, they push down. This is at the end of the first day. At the end of the previous day, rather, this is where it ends. It ends in favor of the sellers. Then it changed direction. After changing direction, sorry. Okay, so in the new that's early in the morning when the market opens the next day, they try to push it down, but they are forced. At the end of the day, the price end the day. So it's a sign that the following morning is going to be what? An uptrend. So when you wake up in the following morning, it's still open at where it ends, and the buyers continue. This is a sign of an uptrend. The same thing with this as well. This one is called Dragonfly Doji. You can see the dragonfly here. This is the dragonfly. This is the dragonfly. Sorry, let me change that. So this is the dragonfly. You can see it. The sellers are still in control and control till previous day. In the morning, this is what you see. In other words, the buyers sustained that point. Strong support. And that is a strong support at that point. And the trend changed. This is the confirmation. And the trend continues, then you can enter at this point. So that's what it means. All of them applies with different time frame. We are going to talk about trading at different time frame depending on your type of trader. We'll talk about that when we get there. Okay, let's move to the next one. So what we are going to do, we might not complete everything today as well, but we'll choose another probably later in the month so that we can. But I will advise us, you can go and create your account on TradingView, download MT4, MT5, create a demo account, and start, practicing. Look out for materials, and before you know what is happening. Okay, look at this. Let's look at this other one, bullish engulfing. Bullish engulfing have look, this is the engulfing part. This is what is engulfing. You are going to see these two patterns coming up.
My
These
hand
two
is up
candles.
for question. Oh, my hand is up for question.
We've not gotten to question session.
Let me finish this part so that you can ask your question when we. Okay, so so this is the engulfing part, and I will try as much as possible to make it clear to us what is engulfing there. Like normally, sorry, let me bring this guy here so that it will be easier. Bullish engulfing. The sellers are in control here. This is day one. It turns in favor of the sellers. Day two, it turns in the favor of the sellers. It might not even be days. It can even be in the last 4 hours. That's if you are doing hourly trading now. I'm just using them both together so that you understand that this candle pattern, as it applies in daily, it also applies in hourly or weekly or monthly. So in the last, this is day 3 away, day 2 away. This is yesterday, and the moment we spotted this one, or let me use hourly. This is 1, 2, 3. 3 hours ago, it hands in the favor of the seller. In 2 hours and 3 hours, it all hand in their favor. But look at what happened here. There was a sharp rejection or a sharp pullback by the, sharp rejection by the sellers, which means the buyers, have control of the market, and they push it up to this point. Though it ends in the favor of the seller, but in their favor, but it doesn't really look at what happens there. So it ends there, and the next time frame shows that the buyers are fully now in control. It totally engulfs what favors the sellers. That's what it means by bullish engulfing. That's what you see. Their power overshadow these guys, and the trend continues. So this is the confirmation that the trend has changed, and you can enter your trade at this point. That's what it means. The same thing with piercing line. In the piercing line in itself, look at it. The green. This is the 2 line you are also looking at. Let me also draw. You see, these are the 2 lines you are looking. 2 candles you are looking at. This one is piercing in the sense that the green does not totally engulf this, but it is not also at what? At the halfway. This is halfway. It rose above half of the previous short. That is red candle. That's what makes it what? A piercing line. The other one is what is called a morning star. This is what a morning star looks like. So the previous candle ends at the favor of the seller. Then you now have this small star in between. Very small. It's not hammer, it's star. Then the buyers gain control. And this is the confirmation that the trend has changed. Now look at it. You are looking for this 3 candle pattern. Hence in favor of the seller, what's it called? A small doji appears there, and the next thing you see is what? You see so that's star, and you see the green bar, gaining control. So these are the 3 combinations you want to see to be sure that you are in the morning star and the trend has changed. And when you have a morning star pattern, it is always bullish. That is, buyers are in control, and you just ride with them. That's what that one means. Don't bother yourself too much about this pattern. It's just like a child that is learning how to walk, and you fall down, you think, oh, I can't walk. No, you are going to walk. The only thing is that you need to strengthen your leg So don't worry, even if you don't understand now, by the time you start trading, you understand. Morning doji star, morning doji star. Look at it here. This is it's almost looking like this, but look at what we have. This, that was a sharp, rejection by what? By buyers here, and they push it up to this point. That's the end of that period, of that time frame. Then you move to something like this, and this pattern also follows. So when you see these three setup within your chart, you know that this is morning star doji and it's a bullish trend. Look at this as well. The following day ends like this, and you now see 1, 2, 3. This is what you are looking for. These three setup. These gray guys, they call them three white soldiers. 1, 2 soldiers. So the moment you see this is their confirmation. This last one is their confirmation that yes, the trend has changed. Then you can now enter the market. And like I said, you don't also just enter the market anyhow. You always look for confirmation. Very, very important. So this is what this is what bearish candlestick pattern looks like. So let me quickly drop this one here on this chart. I think let me see if I can drop it here for everybody to see. Oh, I can't upload any chart here, so I can't upload charts. But I will drop it on the group so that we can copy it and we just go through it. You need to understand all this if you want to be a candlestick trader. You need to understand it very well. So look at the first one is shooting star for the bearish. The buyers they are already in control. The next thing you see, look, what it means is that the sellers gain momentum. It ends in their favor. You can see that's the shooting star. Then you wait for confirmation. This is at this point. This is a confirmation. They can't. I'm hanging man. It's an opposite of what? It's the opposite of a shooting star. They are gaining control, and at this point, the control continues. And at a point here, the sellers gain control and push it. Okay, they push it down. Then the buyers push it up and closes at the favor of the sellers. Then the following candle shows a total takeover by sellers. That's the confirmation. Then you can enter at this point and you ride with the waves. The other one is what is called the gravestone doji. Buyers in control, get to this point. They are still in control. They push it up. Then the sellers completely, reduce their power to this point. Then the next thing you see is a confirmation of that change in direction, and it's continuing in that order, going down. The next one is bearish engulfing, just like the way we have it in the engulfing at the other side. The red candle totally engulfs the green halfway candle. That's the engulfing. This is the confirmation. Then you can come in at this point and ride with the wave. That is the bearish movement. The dark cloud cover is the same with this. They are in control, still in control. Then it gets to this point. They push it up with force. Then there was a sharp pullback by the what's it called now? By the sellers. And then the next thing you see is these two patterns forming. It's dark cloud cover. The dark cloud that is covering the uptrend. That's what you see it. So this is the cloud, dark cloud, this is the confirmation. Then you can come in at this point and ride with the wave. Okay, so and it continues in that order. We have other ones, evening star. This is the setup, the three of these. Buyers in control, get to this point. The sellers took control of it. They write it down. The buyers push it back, and it ends in the favor of the sellers. Then this is what confirms this three setup confirms that evening star, a confirmation, and you can go ahead and enter the market ride with the wave. The same thing with these guys too. Evening doji star. This is the doji in between them, and I believe you still understand what that means. So let's go ahead. Three black crowds. It moves down this way. Buyer is in control. You are looking just like the way you have the three white soldiers. Here it is called black crowds. So 1, 2, 3. The moment you see them, you know that this one you don't even need to wait. It is totally a change of trend. Then you ride with the wave. So that is the major. These are the major candlestick pattern that we have, and you look out for. Now I'll repeat it again. Don't just enter markets blindly. Make sure there is a confirmation, and there's always going to be a confirmation. Like I said, this is the confirmation here for this piercing line, and you can enter trade at this point. The moment you see this, you enter trade at this point. So that's the way it is. Okay, so let me now accommodate questions. So Kemi, you can go ahead with your question. You still in the house?
I don't think it's there. I don't think so. But I think the floor is open for anybody that want to ask questions.
I think she's around. I can see her.
Are you sure?
Hello. Sorry, it's my network. Yeah. I'm
Okay.
back now. Hello. Okay.
Right.
This is my question. On the, I want to take you back to the upward and downward trend. I want to know what you are referring to when you mean upward downward trend. Is it the price trend you are talking about? I don't know. Is it you know, when you say trend, you might be looking at different things. Is it the price we are looking at now? The trend of the price? Let me say, for instance, now, maybe for a stock, in stock exchange now, if I want to invest in stock, I may be looking at the trend of the price and say, okay, if the price of the stock is going to be, say, the next day price might be, say, 1 naira. I don't know. That's why I'm asking what you are referring to your own trend. What exactly do you mean by that? Is it the price you are looking at? I just want to know, maybe the trend you are looking at is price, or is there any other thing that you are looking at that is different from price? Thank you.
Okay. I know Kemi joined us a bit late, so can somebody answer that question?
I'm sorry about that.
No, don't worry.
I
Don't worry.
forgot
It's not
the
a problem.
meeting totally. I even joined late. Yeah, you are right. I forgot. Thank
No,
you.
I'm monitoring everybody from here too, so I know you joined a bit late. Can somebody answer that question so that at least for those of you that came a bit earlier, so that we will know that you didn't actually join us when Kemi joined us. Know that at times you are in a place your mind is not actually here. Okay, so let somebody answer that question for us, so that we'll be sure that I've been communicating all this while. Who's going to help us now? Okay, let me quickly answer that question if there's nobody to answer. Like I said when I started, candlestick always refer to price action. Candlestick always refer to price action. I'll repeat it again. Candlestick always refer to price action. And that's why I said price opens in the morning lower and ends at a higher price at the end of the day. Or it opens at the beginning of an hour and ends higher at the end of an hour. It opens at the beginning of a 15-minute time frame and closes at a higher price. That is the bullish candle or long candle. The bearish candle or the short candle the price opened at a higher price in the beginning of an hour, 15-minute time frame or daily frame, and ends at what? Closes at a lower price. So candlestick pattern always refer to price action. Did I answer your question?
Yeah, yes, very well. Thank you, Mayowa. Thank you. I
Beautiful.
understand now.
Beautiful.
There is this question I actually wanted to ask last week, but events overtook it. I don't know if I can still ask. I want you to help me out. It's over the counter. You made mention of over the counter. I forgot it. Maybe transaction or
Transaction.
what? If you, yes.
Transaction.
Can you explain that? Maybe is it over the counter or OTC? You made mention of something, or I saw it on the slide. I saw it,
Over
but
the
I didn't get
counter, yeah.
the.
It
Yeah,
is over the
I
counter.
didn't really
That's what
get
they
the,
call
yeah,
it. That's what they call it OTC, yes.
OTC. Okay, is OTC that is over the counter. Okay, if you
Yeah.
say over the counter, CO over T, but T is not. I don't know. Has nothing to do with counter now. Maybe what does the acronym stand for then? The acronym.
OTC now, over the counter.
Okay, over the
See?
counter. You are right. Okay, can you now explain? Yeah, it's true. Over the counter, OTC. So can you explain that kind of transaction? Sorry.
The over the counter means that okay, let's look at it from like what I explained last week. If you go to Bureau de Change or Malam and you want to sell or buy foreign currency, when you talk to them, you have the opportunity to negotiate. So you can say, I'm buying at 450. The guy say, it is 470. I want to sell. No, I buy at 450. Okay, bring 450. At that point, you have opportunity to negotiate. But over the counter transaction, you don't have the power to do what? To negotiate. You place an order over the counter, and somebody that is willing to sell, whether you want to buy, somebody that is willing to sell at your own price comes into the market. Somebody is disturbing us. So somebody that is interested in selling at your own buying price comes in and just pick what you have, place on the counter and buy it off and drop your own part on the counter. That's why they call it over the counter transaction. Over the counter transaction is you don't have the power of negotiation. You just put it there. Whoever is pleased with it will come, pick it at that price, and the transaction is done. Or they also put it on the counter. You feel that price is okay for you. You come in and pick it, and you are good to go. Did that answer your question?
Okay. Yeah, you answer it. But then, is it that I will be the ones doing the transaction directly, or probably there is an intermediary? Though it is over the counter, probably I will need an intermediary to do this for me, or I can do it by myself. I don't know. You explained this last week, but I didn't really get it. Is it that
okay?
I have the opportunity? Okay, go ahead.
I
Since you
also
understand my
touch it.
question.
I also touched it this afternoon when I came in before we get started. When I was trying to explain the role of a broker. The broker provides the platform You log into your account. You now place a order. Then your broker execute on your behalf. In most cases, those processes happens, instantaneously. As you are placing the order, in the book of your broker. The broker is executing your order instantly. So you might not see the difference between it. It will look as if you are still the one doing what? Doing it. As a matter of fact, some brokers don't have their own book. That's why I explain A book brokers and B book brokers. So A book brokers, they connect you to the ECN, that is the electronic communication network, that provides like a network for liquidity providers. All of them connected globally from anywhere around the world, providing liquidity to the Forex market. So what you do is you place your order based on your own limited account volume, and your broker, will, blot it up to the liquidity you want, and then they take commission for doing that for you. So when those transactions happen simultaneously, it will look as if you are the one doing it. Meanwhile, you are still the one doing it. But everything is done electronically. That's the way it's structured. I don't know whether I answer your question.
Very, very well, perfectly. Thank you. Thank you. Yeah.
Okay, so at this junction, we are done with all of this. I think will I still drop this on the... Okay, so look at what each of them looks like. Though I didn't explain all at this point. So let's quickly, like I said, you will open a download MT4 for now.
MT4, right?
Yes, that's MetaTrader 4 or MetaTrader 5. You can download it and use it to practice at your level. Play around with those tools. Then, when you think you are good to go into the market, you can use money. You can now use money. Yeah. So when you use money, then the game changes.
Okay.
The game changes when you use money. At that point, when you are still using a demo account, emotion might not set in because you know that you are only using fake money. So by the time you now start using real money, you will be shaking. As in, you will be shaking very well, because you know that there is tendency for you to do what? To lose that money. And that's why I said, before you place your trade, make sure that you understand the first thing I taught. That's the leverage, the margins, and the lot size. Very, very important. Okay, so let's quickly check what a trading platform looks like. So I'm going to stop this one, and I will bring up a chart. Okay, so let me bring up a chart. Can we all see this chart?
Yes,
Can we
we
all see
can
the
see it.
chart? Beautiful.
Yes.
So this is a trading view chart. This is a trading view chart. This is what it looks like. This is my own account, so that's why you are seeing it here. So what you do is you supply your email, you choose your password, normal registration, and it gives you access, to do a free, a free. It's like a free. So when you go to pricing, you can see different plans that you can subscribe to. Free for 30 days, then you can switch to monthly. So for Pro, this is $14 per month to have access to it. You have a Pro Plus, and we have a Premium, which gives you different tools to work with. You can see this. That's what you have. So you can start with free. That's the basic. So it's not a big deal. There is a particular sign you can, when you sign up to, when you register with a particular broker. Look at the list of brokers here. This one. So when you apply to any of this is the South African, what's it called? The South African broker I'm talking about. Minimum you can as low as $50 you can upload. I mean you can deposit. Then they will give you you have a Pro for free. You have a Pro account for free. This is their leverage. The leverage is maximum 400, which is good. It's okay for anybody to start with. Like I said, you don't need up to 400. Just do 50 to start with, so that you can operate within your limits. Okay, so that's that. Let's go back to home page, and so basically this is what you need. You need the chart part. So I have my chart here. These are my charts. These are the tools I can use to draw up my charts. These are some of the other tools I can also use, to interact with my charts. We'll look at them bit by bit. Okay, like I said, up here, you have access to the currency you want to. I hope you can see my cursor. Can you all see my cursor?
Yes, I can see it.
Mm-hmm.
Yes.
So from here, I can go ahead and put, let's say, BTC. Don't mind me. We just want to use BTC for today. So BTC USD. That's what I want to use for now. BTC USD is Bitcoin versus United States dollar. That's what you can see here. And this is where it's being traded from. Okay, so that's for, you can type anything inside. I can use USD. I can use USD against any other thing, any other currency. USD Canadian. I can use it. USD card. Let me pick from the. Okay, so let's complete it. Card. This is Canadian dollar. And I'm picking the first one. That is from my broker anyway. You can check out for your broker here on the list. So that's from my broker. Then I have this. So let me close all the.
So that is the chart. That's chart for USD Canadian dollar. Then followed by it is this. You can see 45. These are the time frame that I'm talking about. 45 minutes, 1 hour, 4 hour,
Day,
daily,
weekly,
weekly,
monthly.
and monthly. Then you can scroll down to check their list.
Okay.
So you can go as low as 1 minute, 3 minutes, 5 minutes, 15 minutes. If you are a daily trader or if you are a scalper will use 1 hour daily time frame combined with 5 minutes. You draw your trend from 1 hour, then you confirm your trend and you execute your trade with 5 minutes. When we get to that point, we might not get to that today, but when we get to that point, we'll talk about it. So that is it. So these are just time frame for your trading, whether it is 1 minute you want to do. It doesn't mean that you are going to be in the market for 1 minute. What it just means is that the moment, whatever candle pattern you see here, they represent 1 minute, 3 minutes, 5 minutes, depending on what you are picking. Like for example, now let me pick 1 hour. So each of these candles you are seeing here represent what? They represent 1 hour, each of them. So let me go back to that candle. Each of these candles. So what it means is that the price moved from this point to this point in 1 hour. That's what it means. It drops from here to this point in 1 hour. The sellers gain momentum back. Buyers gain momentum back and manage to push it a bit to this point before it ends within that hour. I think this movement happens in less than 15 minutes thereabout. I was in the market the day that, and then when price move down, it's not bad omen. As a matter of fact, some people will know, okay, it's a bit more than this 15 minutes one. Is it 15 minutes? Yes, one. Okay, let's check 45. So it happens. How many 45s do we have there? This is 1, 2, and 3. So it happens in that's 45 multiplied by 3 in 90, 100 and 135.
135.
Yes, 135 minutes. That's in 2 hours and 15 minutes. Everything happens in 2 hours and 15 minutes. That's what this means. Price drop from here, and it takes 2 hours before it drops to this point. If you're in the market this day, the best place to sell off is here.
Okay.
The moment you sell off, if you are trading with MT4, or you are trading directly on the Forex market anyway, let's use that word, the futures market, whichever way you call it, you can now place what is called a sell order and ride with this. When you ride with this, you ride with this movement down. Rather than losing money, you're also gaining money as it's coming. That's where at this point I will go back to my first slide that I wanted to explain the other time, where I talked about short selling. I'll go back to it. Now that one doesn't it doesn't exist. Short selling doesn't exist in a typical cryptocurrency trading market. It doesn't exist. Short selling doesn't exist, but it exists in Forex market. What it means is that when the price is going up,
You are riding with, you are buying, and you buy at low price and you sell at high price, just like this. Now, what it means at this point is that when you are short selling, you sell it at this point and come and buy it back at this point. But you remember that it is not your instrument. When you sell at this point, you sold it, you lend it from your what is it called, from your broker, and sell it to the market and come down here to come and buy it back. You have made your own profit margin and you give what belongs to your broker back. He also made his own what? His own profit, his own commission on what you have transacted. That is what it means at that point. So basically, that is what the chart looks like. So this is the candle type that I'm talking about. It can be buy, can be candlestick, which is the price itself. The line pattern here is used to actually determine what the trend looks like, and is the best way to draw, to do trending. Trend means that in which direction is the market going. Look at something I draw up here now. Specifically for this. Let me remove this, or I'm not going to remove it. Let me just hide it. I'll bring it back later. But I'm using it for something. Okay, so look at what we have. So let me go back to charting. How do we draw up our chart? How do we actually trade in the market? When you want to trade, the first thing you need to do is to understand the direction in which the market is heading. Okay, somebody is trying to obey the law of so it's our host too. Coordinator.
Yes, sir. I'm making noise, right?
Okay, so let me quickly share that short selling, then you see what I'm talking. I've already explained it. Do I even need to explain what it means? So when you want to trade, the first thing you need to do is to understand the trend. Understand trend. Very, very important. And the usual saying is that trend is always your what? Is always your friend. Trend is always your friend. Trend is always your friend. And is always your friend when you understand the direction in which it's going. So how do you understand how to play well in the market? The first thing is for you to draw what is called the support and the resistance line. You need to draw up the support and the resistance line. When you draw the support and the resistance line, then you can divide it into zones, divide those support and resistance lines into zone, and apart from that, you now draw up your trend. You know where it's going. Other things will come up, which I will explain, and I will make it as simple as possible. So this is what a typical market looks like. Now, one of the things you need to first of all do here is you need to understand what the market looks like. The bigger picture. You need to have the bigger picture of the market, what the market generally looks like. Okay, so before you can do that, you need to view out. You need to zoom out very well. So let's go ahead and do. Let's do a 4-hour trading trading view. So this is it. This is what 4 hours looks like. Let me also reduce it very well so that okay, we have this. Beautiful. So this is what it looks like. This is what it looks like. So when you check this has been coming all the way from all the way from 2019, then it will give us an idea of what is going on. So let's start by, first of all, let's start with, I'm going to use from this my tools here, and already I have the favorite tools here. You can see them here. These are the ones I will be using on a daily basis. So if I want to add anyone to it now, I'll come to this, like for example this, it will draw up the list for me. Then I can make it like this info line. I will just add it up to the favorite, and you can see it here. It's already here. If I don't want it again, I'll take it out. So it's out already. So that's why you see all these ones that I have here. I have a lot of them. You can just go ahead, all of them. You just need a few of them that can help you, to understand the market, and that's just it. It is not how well you use the whole tool that matters. It is how you can maximize your understanding of the market by the little tools you can use. That's the most important thing. So let's go ahead, and I'm going to use, I can use this horizontal line. Let's start with that later. Now, look at this point. This is uh, a line that are okay. One of the things when you are drawing up a line, you are not just
Sorry,
drawing. Yes.
Maiwa,
Yes.
sorry, I don't want you to lose track. I don't want you to get to the end of the section, and we now have to come back here to address the question I want to ask. I'm so sorry.
Okay.
I'm not supposed to ask this question until after this section, but I'm sorry. Just permit me to ask.
Right.
Now, this chart that you are talking about now, can I use it? You said it will help me to understand the market. Should I see it as a prediction system or solution now that will assist me to know, the trend, the market trend? Should I see it like that? The chart?
Yes. The
And
majorly
okay,
what charting does is, go ahead.
if that is it, then I'm looking now at how reliable, or what is the percentage of accuracy of this chart, so that I will know that at any point in time, if I go into the chart, I will know that, okay, if the chart gives me, say, okay, go for the market now, that it is profitable, then I will go. I want to know how accurate it is. Maybe it's something that I can rely on, or I don't know. That's why I'm asking this question. Thank you.
Your understanding of charts will help you. It's just charting is a guide. Let me use that word. It guides you. You understand? And when you understand how market behaves, it will give you an idea of how to play your way. But is it 100% accurate? It's a dynamic market and it evolves. So it's not going to be 100% accurate. And that's why we say you set your risk. You have to set your risk level. Your chart, because you understand charting, you have done your best by drawing out your support, your zoning, and the understanding the price actions. But because the market does not look at you before action takes place, that's why I said it is not 100%, but it will guide you to manage your trading activities properly. I will explain it in this manner. We're in raining season. That rain will fall tomorrow is a probability. And you are sure because it is what? Rain might fall between now and 3 days' time. But you are not sure it's going to fall maybe later today or tomorrow. So that is the way chart works. Then you can plot your way. So whatever happens at the end of the day, the first thing is, if what you have drawn, the market goes in favor of your setup, then you make gains. But if it goes the other way around, you have also determined how much you are willing to lose if it goes against you. So no hard feelings. That's the essence of this training. And this is one of the things that everybody that is listening to me now, this is what you should put. If you are waiting for anybody to tell you that there is certainty in any business, there is nobody that will tell you that. That I am so successful in trading doesn't mean another person will be successful. My result does not determine your result. Because the truth is that the market in itself is dynamic. And there are a lot of things that happens underground that most of us don't even have opportunity to have access to. So that's why drawing up your chart. Now let's look it this way. That is why in most cases, that's why they say psychology, that's what works. Psychology works. Human behavior to market movement. That is what is being traded here. Nothing more than that. And whoever trades, like, let me give you an example now. Market will open on Monday. Somebody has already started plotting his way over this weekend. You are also plotting your way. Maybe while you are drawing up your chart, there are 1 million people across the world that are drawing the same chart the way you are drawing your own chart. And they have concluded in their mind to also trade the way you have concluded to trade. So what it means is that the 1 million of you that you don't know are going to affect the markets by Monday morning. And so whoever has the upper hand, and there are some people that will say, okay, I'm only going to stay for 1 hour in the trend. If those people that want to trade by 1 hour time frame are more than those of you that want to stay for a whole day, they will carry the whole day. So other things will join. What volume are they trading at? And that's what you are seeing these ones here. All these ones are volumes. What volumes are they trading at? Because their volume will determine who owns the market, who wins the market. But charting will enable you to see what is likely to happen. But in case if it doesn't happen, I'm not going to lose more than $20. Did I answer your question?
Yes. Thank you.
Beautiful. So, somebody asked a question here. Which of the time frame is better? Daily, hourly, or monthly? It depends. There are some people that want to stay in the market. No, trading is in short, mid, and long term. Somebody wants to be in the market and say, okay, I'm going to be on this trade for 1 week. So you look at weekly. You don't want to bother yourself about what happened during the week. During the days. Your own is between Monday and Friday, what is going to play out. So you look at weekly. Like this. You look at weekly. You can see what I'm doing. Look at weekly. Let's try and just reset. When you want to reset your chart, just just right click on the chart and look at reset chart. So this is weekly. So what is going to happen? Based on your pattern like this now, you can now go ahead and play for the week. It is your choice. There are sometimes you don't need to stay too long in the market. For me, now, for example, if I'm trading Bitcoin, there are days that you can pick as high as 300,000 naira, which is approximately 8,000. What it means is that you wake up in that morning, Bitcoin was 8,000. By the end of that day, it has risen up to what? To 9,000. You exit the market, you keep your 1,000 in your pocket. It's only Bitcoin and other cryptocurrency that can move in that volume. Other currencies doesn't move in that volume. Like for the past 2-3 weeks now, if you are able to pick like 30,000, 40,000 from the Bitcoin market, you have really tried. That is per day or per every 3 days. Since 2 days ago now, the margin has been so meager. So if you pick 5,000 per day, fine. Some of us, we have it kept somewhere. We're waiting for a day when it's going to be probably $20,000 per one, and we will sell it at that time. We don't know when it will happen, but we know we have that volume stored somewhere. We're only waiting for a day when that will happen, and when it happens, we won. But what happened in between now and then is not what I want to bother my head about. That is the psychology. There are millions of people around the world that have the same mindset too, and they are playing by that. And the moment that their set price are coming closer, they start moving to the market, because that's the time they need to take action. So that is the way it works. There are some people that their own is, I only want to be in the market for 4 hours. They are looking for opportunities, and I'm going to do 10 trades. And I don't need much. I only need 20 pips. So you are looking for opportunity to see those doji, to see those golfing, bearing, and all those stuff. The moment you spot them and there was a confirmation, you jump into the market. I have made up my mind to only move 20 pips. The moment you move 20 pips, it stops. I'm out of the market. I'll pick 20 pips. I will stop. I'll wait for another opportunity. It's coming down. It's coming down. It shows that it is bearish movement. You look out for that opportunity. The moment it is confirmed, you jump into the market, move 20 pips, pay and pips, you are out of the market. Those ones, they are called scalpers. You are not interested in weeks. You are not. So if you are that kind of person, you will be operating at 1 hour 45. But for mid-term people that are ready to stay in the market, 4 hours is good. You do your daily, you do your weekly, then you come and trade at 4 hours. So that's the way it works. So it depends on what you are doing, but I can advise you based on what type of trader you want to do, probably at a personal level. So if I've been able to answer those questions, you said, is it the same way of trading in crypto? Yes, it is the same way in crypto crypto trading, only that if you are like this one now, this is crypto. That Bitcoin is crypto on Forex platform. So it's different. There are platforms that are strictly for cryptocurrency. We have different types of them. Crypto is another level in itself. So what you do at this level is you can long here and you can short here. What it means is you can buy and you can sell. You can make profit while selling. You can make profit while buying. That's what it means from this one. But on the cryptocurrency platform, you only buy low and sell high. And you wait for price to come down to your terms. You buy again, wait for price to rise, and you sell again. That's the way it works on crypto. But here, you can buy and ride the wave down. As it's coming down too, you can also sell and wait and come and buy under. So that's the way it works. I hope I answered that question too. Can you be buying and selling simultaneously? Yes, you can be buying and selling simultaneously, but you have to be careful when you are doing that. You can do multiple, that's what they call, you place multiple trades. So what it means is that you set it, but one thing is this: if you are doing that, it shows that you are not confident of your skill when it comes to understanding trend. That's what it means. And it's a bit dangerous for you if you are doing that. But what you can do is this: you can place more than one trade. What it means is that I can be trading USD card and also be trading Euro USD. So I can do that one when you have a better understanding of it. But if you want to be a scalper, very good. You can just, okay, as the price is going up, you buy. As it's coming down, you sell. As it's going up, you buy. As it's coming down. But you have to be careful. You have to be careful. So you have to be sure of when to enter and where to exit before you. Well, you have to strengthen your hand to be able to do that. Can you be buying? Okay, I think that's the same question I answered. You can be buying and selling the same commodity at the same time, only that you must be very, very careful about that. So that, because when the trend goes against you and it touches your stop loss, definitely you're out of the market. And remember, I said what keeps you in the market is how much you can, how much of wins you can have over your losses. That's what keeps you in the market. Okay, so let's quickly try and draw up and set up our market here. Let's set up our market. The best way to set up market is to avoid all the noises in the market, so that when you avoid all the noise in the market, then it will help you to have an accurate image of what the market looks like. So how do I mean when I say avoid all the noises? Like, look at all these weeks, all these long weeks, short weeks under, they are noises. So what you want to do is you want to see the picture of the open and the close in the market. That's what you want to see. So in that word, the best way to do that, like I said, is to use your sorry, what do I did I touch it? Okay, sorry. So you change to line.
Let's go to the line. These people have more of this plastic.
So look at it here. We have the line here, and I'm using weekly. No, I'm going to use weekly. If you are going to start with 4 hours first. That one is okay for you. Start with 4 hours, and it will help you a lot. Start with 4 hours. Start with 4 hours. Okay, let me do it within this price action for now. If I'm to do it by what I have here, this is downtrend anyway. And which time is this?
This looks like it, but
as at May 20. Look at what I have another one here that I need to corroborate. As at May 20, this price was at 41,144. It was at this point. So let's go there and see. This is a recent price action. This one is it's a long time. So if I'm going to make it, I'm going to draw it from that point. This one is far away. So let's stay within from June 1st. So let's just stay within this cycle. If I'm going to stay at that cycle, let me use the zoom tool. I will just draw it this way. Let me see a big picture. Let me draw up this way. So I'll push it up. Stretch it so that I can see all the area of all the zones. So let me pick this line. This is the highest point of rejection. That's what they call. This is rejection here, and this way is called the support. This part is called the support. So let me push it up. I can touch it. This is the support. This is a big support presently. Support. There are other ones under too, like this one. We can't overlook it as well. So let's. This is another one here, but which one is more pronounced? I think this one is more pronounced. So this is more pronounced because it touches here, from here, and it also touches from here. If I'm to reduce the time frame to, let's say, like 1 hour, we will still see more of it. But let us draw the structure up. Let's draw the first set of our chart from 4 hours. Then we'll go down. We'll move a bit down to 1 hour. Okay, so we have one here. So this is the support that turns to resistance. Support that turns resistance. Then this is another one. It is touching another one presently as we are talking. So let's draw it. Let's draw it up as well. Okay, I will.
Maybe Koro don't go now.
Koro don't go. The thing wey Koro cause.
Maybe we don't start.
Go
Everything don't start back.
Not be immediately, my sister. It is
Okay, so
when
that
they
is one of that.
then they will now reduce the
Disturbing
price
us with Corona.
So
This is
if we don't
another
already
one.
get the market, so what you now
There
go
is
do?
no way.
Now I will explain. Let me try as much as possible to explain how I get my, those line of impact. Now, when you look at this is where this one is presently. It has respected that same spot here. And when you look along the line as well, it has respected it, especially around here. Let me draw it so that you see what I'm talking about. This is where it is presently. There is no market today, so it won't move below that. It has respected it at this point as well. There is also a respect at this point. So we need 3 maximum anyway. It has also respected it at this point. We need 3 anyway. So we have 1, 2, 3, 4 already. So which means it's area of significance. You can't ignore what happened here. There is another place where you cannot ignore what happened, and I will show it to you now. It happens there as well. But it is not for you to recognize everything at once for now. You have to reduce it so that you'll be able to, have a clean chart. So let me also draw another part. See another one. There is another one here. So when you look at this one, I left this out to deal with the one there. What happened here? It was a free break from here. So you can see here, we have one touch here, another touch here, and another touch here. And when you go back, look at it. So these are area of significance that you can't overlook. Let us look up as well. These are one. This is another one. Look at it. Look at it. If you pick from here as well, do we have it? Yes, we do. This is one here. This is one here. And I will explain this one. Now, I have an indicator here that is called 50 MA. It's called moving average. When we get there, I will explain what the 50 MA is all about. What 50 MA means is that moving average brings together 50 candles backward, their prices, and add all of them together and do what? And find the average. That's the moving average. So what it means is that if it is 4 hours, it shows that in the last 50 or 4 hours, this is what the movement in the price, this is what the price action has been like. And you cannot ignore this point at all, because this is where this movement, this price action touches the moving average. So there is likelihood that the market will play in between here since it is below it. Even if it's coming up, it will still come here and bounce back. If we further, break this thing down, you will discover that this place was touched several times around here before it finally breaks down into this. And look at it, when it eventually even break down, it reverses. That this is the pullback confirmation, then takes up again. And when it got to this place, so presently, as at the market is now, this is a very strong place of resistance at this point. It means that a lot of people are selling at this point. People place order for sell at this point. So even if it is going up, which is bullish, when it gets to this point, all the volume that is available here for sale must be what? Must be eaten up before it can break through it and do what? And continue the uptrend. That's what it means. So that's that. I've been able to explain that. So we still have others, depending on the number of pips you are looking at and the risk you want to take as well. The funniest thing about the uptrend is that uptrend doesn't have, when movement, the trend is in your favor, it doesn't have limits, because as much you make, so also your broker makes from your trade. So it doesn't have a limit, but you can't lose their money with your home money. So I think we are good with this. I'm not going to draw more than this. As a matter of fact, I'm going to delete some of them later. I will delete probably so that we can concentrate on this part. So if it breaks down, we are looking at this area. And when you look at what is the PIP like? Let me use, I'm using a fib, sorry, I'm using a fib to do that. Don't worry. All these things, okay, sorry. Okay, let's use something different from fib. If it's coming down, we're going to short it. So short. Let's look at what that short can give to us. How many pips? So look at it here. We have it here. I'm not concerned about this anyway. I'm only concerned about what is here. The number of pips is about 52 pips. For a conservative trader, 52 pips is a good one. It's a very good one for a conservative trader. If you have 52, that doesn't mean you can't wait for a bigger one. But for me, I always like staying within 20 so that I'll be sure that even if it doesn't go to 50, I can take profit at 20 and be okay. I can just be taking it 20. When it gets down, when it's about coming up, I'll pick it up. So somewhere around here is good. But look at this. If you can wait for this, which is possible too. So that's it. So this is how to draw up your line and take it to zone. Now, one of my mentors said something. He said, always trade zone to zone. Always trade zone to zone, because you are sure. Like, for example, if this trade is going back up, it must respect this place, respect this zone, move up a bit, come down before it starts going up. When it gets to this place, it must respect that zone, come back, and continue up. Get to this place, respect that zone, pull back, and go up. That is the way it will continue. So, for example, now, if this price is pulling back, now, there might be this one might, because when you look at what is happening now, this is at it's a downtrend. Let us reset let's reset. You can see this is a downtrend, and I will show it to you by, let us just draw. This is a trend line. Let's draw from here to somewhere here. So that is the downtrend. So even if it is coming up, it will respect this trend line, to respect it, and might likely bounce back. So this is a downtrend. And the moment it breaks this, it will respect all these zones. So that's why you trade zone to zone. As it moves up, pull back, confirm, you jump in, take whatever you want to take. If you want to take the full ride, you can take the full ride. And in most cases, what you always do is this. The moment it's in your favor, push your stop loss up. Let the stop loss continue to rise with the rise in the trend. And that one, you are sure that you are not losing. We'll learn all of that strategy as we continue in this. So this is how to zone your trade. Then you can now go to a lower time frame, like 1 hour. Then you now see it clearly what you've drawn.
Like for example, look at it. Look at what we've done. With what we've drawn before. Let me clean this. Okay, so let me also clean this. And let's reduce it so that we can see it properly. Okay, so let's stretch it so that I can see those area of importance. Let's start with this one. Let me make this one invisible for now. Look at it. Look at my drawings. I want you to respect this point, so I can adjust now. I want it to respect this point. I can adjust now. See my adjustment now. If I want this, so that I will assume this one, but this is very significant. 1, 2 here. Look at it. 1, 2, 3 here. So let's leave it at that point. I can adjust them. This one makes sense. Look at it. This is 1. This is another point. Look at this one. This one is where is the circle? Okay, look at it. This is 1 here. This is 1 here. These are just fake out. This one too. We have 1 here. Let us respect the most touch within. Okay, so look at it. 1, 2, 3, then 4 here. So I can just adjust to be more accurate. This one is okay. Let's leave it at this. This is 1, 2, 3, 4 here. We still have 5 here. 6 presently. So it's a major point of concentration. We even have others at the back. So that is how it is. So whatever the trend behaves like, we are sure that we have been able to. Okay, look at 1 here as well. This one too is also another area. But we can keep a close eye on it. Remember, I said you reduce the number of lines you draw to the barest minimum, so that it won't there are times you just use a triangle to do that. Then this is another one, another point. So another point here. Look at another point here, another point here. So these are areas of significance. If you want to trade within it, you can go ahead. So let's draw one here. This is another trend line. It hasn't gone to this. So before it can even get to this point, it will have to break all these 1, 2 zones, 4, 3 zones, 4 zones, and it continues in that order. So this is what it looks like. Now this is a downtrend, like I said. So let's bring back our trend. Where is that? Okay. So let's bring that trend line. We've closed it. So where's the trend line? Okay, look at it here. So let's try and okay, look at the trend line here. So since we know that, okay, we can even use, let us be precise about our trend line. Okay, so let it touch this. So very, very accurate now for 1 hour trade. So let's bring everything together. So look at number 1. So what is the interpretation of what we have drawn here? The first thing is that the general trend is downtrend. So the funniest thing is that this trend might likely continue. So even if it changes direction, when it bounces back, if it bounces back, like I said,
like I said, if it bounce back, it will have to go, respect this, come back, pull back, confirmation, and move up. Respect that place, pull back. Now, this is a critical line, a critical trend line. So you can now, you can go ahead and let's look at what we have there. This is 1 hour. This is 8 tomorrow. Unfortunately, there's no market tomorrow, so it won't happen tomorrow. So market opens on Monday. But what we know that generally it's going down. So there is likelihood. I want to explain something here. That's something here. That's why I'm saying this. You know, general trend is what? Is downtrend. So there is likelihood that we come back on Monday and the trend will continue the way it's going. You know, it's going downtrend here. There is every possibility that the line will continue to go down. So we can set our point, we can set, do our market setup based on this. Okay, we anticipate that it's going to respect this place. What is the pip between here and here? Let's check it. Let's check the number of pips between here and here. No. Okay, so let us see what, what's wrong with you? Sorry, Gary. Okay, so let's see what this pip from here to here will looks like. And that's why we know it's short. When you are selling, it's short. So let's say from here down. Okay, so from this point to this first point, that's 10 pip. So 10 pip is not enough, probably for me, Sha. So let's try and double that, 20 pips. So I'll be looking out, you know, for a movement from that point, from here to this place in the morning on Monday. So I'll be looking for a movement. And if I can catch this 20 pip, I'm good to go. So the moment it gets to this point and it respected this, so you can see if it can pick up my 20 pips, it shows that it can still get to this point before it returns back. So breaking this, good one for me, and they're coming down here. So that is the way to determine what it looks like. But like I said, it can also do what? It can turn the other way around. So that doesn't mean, but it won't turn immediately. Look at it. It's going, it will complete this cycle, touch this place. Then from here, you can now determine whether you want to come into the market. The moment it stretches down, that's the call. It will stretch here, come back a little. Let me remove this one. Let me remove this line. Let me show you, even if it's coming, if it's going to come down, this is what it's going to be like. Let's remove this one. So this is what it's going to look like if it's coming down. If the trend will continue in this way, this is what it's going to look like. Okay, let's still use our red. So it will continue its journey. Break this. That's what you should see. Pull back like this. The moment it pulled back like this and it doesn't continue that way, and it pulls back, that is a sign of continuation in trend. So it will move down, continuing the, sorry, let me do a proper thing. The same thing, to come down, break that point, come down,
respect this line, this zone, come down a bit, return back for confirmation, then continue in that order, respect this line, pull back, continue in that order. So that is what is expected if it's going to continue in this trend. But if it's also going back, it is so sure that by the time it's returning, it's going to return. Sorry. So if it's going to return, it's going to return this way. It will finish this line, bam, come back as a confirmation, continue upward, respect this zone, pull back, continue up, respect this zone, pull back, continue in that order. So that is the way it is. Now, let me stop at this point and let us together ask questions based on what I've drawn up on the chart. I think we are ready to conclude the class now.
Okay, yes, thank you, Mayowa. Thank you so far for the presentation. Yeah, the question I have again is, I can see that you made mention of one technical indicator there, which is the moving average. Is that the only factor we should look out for when we are drawing this?
I've not even dealt with, I've not dealt with any form of moving average for now. I just use it as a reference. I've not done anything on moving average. I just said that moving average is a critical factor to consider when it comes to price movement. I've not talked about moving average at all. I just mentioned that it's going to be a critical factor to but we've not even learned anything about all these indicators. So leave indicators alone for now.
Okay. Thank you. Yeah, thanks.
So do we have any other question? Now, if there is no any question, let us zoom back. I want to ask a question. Based on the prevailing circumstances that we can see here, let's go to 4 hours. And then let me remove some of the line up here. I'll remove in between as well. Or let's leave it. Let's leave those in between. So looking at what we have here, by Monday morning, when the market opens, where do you think the market direction will head? Are we still in this market? I mean, this training session? We are rounding up already. Some people have run out.
It's tiny. From my own, because I'm using my phone, it's much tiny, so I don't know what I can use as my y-axis, z-axis, so that.
So for someone that can see clearly of what we have here, where is likely going to be the direction of the market by Monday morning? The most sure way, direction of the market. Now let us all remove our or mute ourselves so that we know we are here. Unmute. So that we know we are not sleeping.
We are with you. We are not sleeping.
I have only 7 people left.
Who is on? Who is not on? Madam Magdi don't enter market already. I understand. Did nothing. All these are foreign colleagues. Are
What
they
happened? I
still
think we
there?
are even more than this.
I'm
Are
with
they all
you.
left? Are they
Ibigiga,
all
I'm with
left?
you.
I want to be sure that we are here.
What if Madam
Who else?
do?
Who else? Who else? Who else? I know, Madam Han, you don't enter market. No wala. Mute your mute. I don't hear you. I don't hear you say Corona don't go, so I know say you don't enter market. No wala.
I'm going money now next week.
I know. No wala. I understand that one.
It is
well.
So I said that with the prevailing situation that we have here, based on the charts we have on board, where is the short direction of the market?
Ebe consult, bail us out though.
Nobody.
Sorry, dear. Only me take out tomorrow. Attend me by now.
I should eat it too. I should eat it too. Okay, so where is likely going to be the direction?
I think it is where we have the peak of the how do I put it now, the trend.
No. Two things.
Yeah,
is it
where that your
uptrend?
cursor is now.
Is it that uptrend?
Yeah, or
just
down.
hold on. The right answer is that is it that uptrend or downtrend? That's the right answer.
Okay.
Because is it that the markets, respect that this zone,
or the
move
other
down,
zone,
touch this, and change direction and move up, or it will continue in the downtrend. So my question is, based on this setup, where is the most sure direction for this market?
Is that this upstream, where the moving average goes over the upstream, then you move a little bit. This is the sure way.
Is the up. Up is the
sure way.
Yeah.
Why?
Because if you look at the moving average, it touches the upstream a little bit.
It doesn't have anything to do with moving average.
Moving average. It's because the market is just opening. I think that's why, because you are just opening the markets. So the direction
who is opening the market?
Is it not you?
Well, maybe I'm not getting it. Maybe I'm not getting it.
Are you the one opening the market today? Okay, let's look at this. Let's look at this point. When we draw a trend line, where is the trend line? The trend line favors what? This line. Let me change the color of that line.
Yes.
So that you will see it properly. Let me make it yellow. That yellow line favors downtrend. And because
how explain? Yes.
So let me reset. Look at it now. Is this one moving down or moving up? This line, this yellow line, is it moving down or moving up?
It's down. It's down. It's down. No, it's going down.
If it is going up, this is the way it will do now. Am I right?
Yeah.
But because it touches these lines, look at this line. And when you look at those lines now, it's creating new lows. Look at it. It's on its way down. Yeah. And as it stands now, the market is going down. So by Monday, there is likelihood that the market will continue to go down. Even if it's going to change direction, look at it here. It must respect Where is it? This is where it is. It must respect this spot. So there is a sure banker that this is where it's going to stop at this, even if it's going to go up. But because this is a downtrend, our assumption favors the continuous downward movement of price. This is where I'm going to stop the class today. I wanted to give, what was it called before? I wanted to give my $10 before, but nobody gets that.
But we
didn't ask one question, huh?
Mayo, I said downward now, Abba.
Forget that thing. Forget that thing. Which kind of say downward?
See, Kemi want to use SUGT for me again.
Anna, don't mind her. Don't mind her.
You want to use SUGT for me again? Okay. So that's the way it is. That's the way it is. So the next time we'll be coming up, maybe at that time I will give a lot of bounties. So I want to know how far you've gone. I want to evaluate your understanding. And the only way to this is, one, I said, okay, I think coordinator will finalize on that if we are to create a special group for this class so that we can take it beyond this. There are a lot of things you can do with this skill. There are a lot of things you can do with the tools. By the grace of God, I have access to. And I won't say more than that. So let's, if there's no question, I think we can call it a day. It's a good place to stop.
Okay. Anybody that want to ask question, please? Any question?
No, I don't have question. I just want to appreciate the presenter. This is a wonderful presentation. Thank you, Mayowa. God will continue to give you more knowledge in the mighty name of Jesus. More knowledge, more wisdom in the mighty, and more success in the mighty name of Jesus. Thank you very much.
I appreciate it.
Thank you, everybody. A round of applause for our presenter. He has really did a justice to this trade. I know I don't expect something less from him, so I'm so confident in him. Is a Forex trade group by excellence, so I don't really make any mistake by inviting him to this platform to come and give us a talk. So I want to say thank you very much, sir. God bless you. For all of us that make our time also out here to be here this afternoon, I know our even with our busy schedule, we still take our time to be here this afternoon to come and gain more knowledge in this area. As he has rightly said, we should try to make sure that we use this tool very well so that our time and also his time will not be in vain. The beauty of this is that when he sees us tomorrow and we are flying in the marketplace, then he knows that the time he put into this thing and our own time also is not in vain. I believe and I pray to God that God will help us to be able to make use of this training very well. And then I want to seek for one thing from our presenter, if we can get the slide so that in our own time we can go through it and then we can venture into other things to back it up also. So it's just it's a plea. If we can get the slide, sir, we will really appreciate it.
I would drop it on the group.
Okay.
I'll drop it on the group.
Thank you so much. Also, I think we need to create additional group, especially for this group, so that even if you have question, instead of taking it to the main group, we can ask the question at that place. And then our presenter can do justice to that question. That's my own thinking.
There is something I need to add before I will stop.
Okay, sir.
There's an opportunity, like I said last week, that I have access to this cycle of traders they are professional traders. And what they normally do is, since you now the basics of trading, we can leverage on their expertise they will have done what is called a technical analysis from their own end. So what they just need to do is they send us signal, we look at the signal based on our understanding too. If the signal makes sense, we trade it. If it doesn't make sense, we allow it to go. So it reduces the rate at which you have to sit down in front of
the
the
risk
system
level
for us. So
okay.
That one is not free,
Okay.
because I
Okay,
understand
they
that.
have a commission for that, right?
Do I have a question? I have something to say.
Okay.
I know there is a place of mentoring in everything.
Mm.
And I want you to look at that before our next gathering, so that you talk more on mentoring. Now, for some people that are really interested, but not personally to me, I wrote something in the chat group that can we have a tutorial on this, so that one could personally take his or her time and study tutorial to get better understanding of all this. But far beyond this, as we already said, that there are some group whose interest is studying the market and at least alert others that, okay, the market is a bit better, you can now come in. I think that is very good, and some of us will love to have a better understanding on that, and now one can key into it. Thank you, sir.
So what I'm going to do is to have access to that. It costs me like it will cost individual, every one of us, $100 monthly to have access to that.
Okay.
What we can do at the interim is I have a smaller group. I have people that are into it. Minimum of $30. So what I just do is I compare from the $100 group. I have another group of about like 200. I paid $200 a monthly on that one as well. So we can just put all their efforts together on that our $30 monthly group. It will reduce the cost on it, because by the time you look at it now, that is about $300 every month on me. So we can just do that one, and we'll see what the result looks like. From my own end, the result has been great, very great. I just show you a demo. I can't even show you my real account. And I didn't want to do that anyway, so that I won't intimidate somebody.
No, it's not really nice.
Mayowa, for the
Yes.
$30, can't we pay? Is it possible to pay the naira equivalent, or it must be in dollar?
I even want you to pay in dollars so that you can. Let me tell you what I do to my group. Have you ever wondered the reason why these people kept on coming here before you even came in? The reason is because whatever I know, I want them to know, and they know it. So why do I need to collect naira from you? I just said I would have loved to give $10 now. And if I'm to give $10 to Isaiah now, there is no place he will collect, he will receive it. Because he doesn't even know there is a wallet that is called Ethereum, that I can send Ethereum $30 equivalent to him. And if he said he want to change it to naira, all he needs is just to send it back to my Ethereum wallet, and I will send it back. But there is no secret anywhere. Nobody, there is no, they call it island, or there is no island of knowledge. Where you think it is, if I didn't show you today, somebody will show you tomorrow. So it's better for you to write me as part of your
success story.
As part of the success story. It's better for me that way than for someone else to do it to you. So what we will do is this: in that group, we will come in. You will quickly go and open. I will take you through the cryptocurrency part of the trading, how to open wallet, how to use the wallet, how to get. So whatever naira you think you want to pay, just change it to cryptocurrency and send it to me. And probably the day I'm doing bounty, I can also give it out and you still receive it. And I will still teach you how to change it back to your naira. From just do it up. How to just go in that cycle, and you won't have to rely on me for anything again. You just do your thing. The one that you need to contact me, and we will all be growing. That's the way it works. I don't know whether I answer Kemi's. So let's do it that way. We just use that opportunity to learn how to interact with cryptocurrency. That's my best bet for now. It works like fire, and it's not an information anybody can keep. It's in the public domain there. But permit me, give me the privilege to show you first, so that you can always make reference back to me.
Okay. Thank you so much. We
I'm sorry. I want to leave this meeting. I have another meeting for.
You can't leave until we complete this thing. You can't leave.
You cannot leave because you are
cannot
giving
leave.
us
You are
closing
supposed to.
prayer.
I have another
I'm
meeting
sorry.
for.
I'm the convener. I'm the convener of the meeting. I'm so sorry. Let me leave
No,
now.
just wait 3 minutes. 3 minutes.
Okay, let's do 2 minutes.
Okay.
I still have 4 minutes.
Okay, that's okay. Thank you so much, every one of you, for coming. And I also thank our presenter. I think, presenter, I will talk to you behind the scene to discuss one or two things. So at this junction, I want to say thank you so much, sir. And I want our Sister Kemi, to close us in prayer.
Okay, everlasting King of Glory, we want to thank you for this wonderful time. We want to thank you for the knowledge sharing. We want to thank you for everything. Father, we pray, oh Lord, even for what we have learned, we pray that you grant us the grace to be able to put them into use, not just for hearing sake, not just for the sharing sake, but to be able to put them into use. Daddy, we pray for that grace and ability in the mighty name of Jesus.
Amen.
Daddy, we also want to thank you even for the presenter, that you continue to add more, to bless him with more wisdom. We pray, oh Lord, that we continue to add to his knowledge. And we also pray, oh Lord, that you continue to give him more sources in every of his endeavor in the mighty name of Jesus.
Amen.
I pray that it shall be well with everyone. I pray that it shall be well with each and every one of us in the mighty name of Jesus.
Amen.
For in Jesus' mighty name we have prayed.
Amen. Thank you so much, and God bless you.
Amen.
So we'll discuss behind the scene, the presenter, so that we'll know how to run the conclusion part of it. But I think there is a need for us to create a group so that we can be doing one or two things there, even before we come up for another meeting. I hope our presenter will have time for us on that group, sir.
By God's grace.
Okay, sir. Thank you so much. We really appreciate you. So I want to say bye-bye to each and every one of you until when we call us again. So be definitely sure that we're going to call you guys back so that we can conclude on what we have started already, and it will translate into money for us. Because the essence of us being here this evening or this afternoon is to make sure that we are able to make a good money. And God will help us to do that in the mighty name of Jesus. So once again, I want to say thank you for your time. Thank you, thank you, thank you. And God bless you till we meet again. God bless you.
God bless you.
Thank you, sir. God bless you.
Bye.
Thank you. Bye.
Bye.
Bye.